Welcome back to the Williams Real Estate Channel. Today we are discussing, could we be on a cusp of a third world war? And if so, how would that impact the Australian property market? Now you may be thinking, what is this guy on about now, talking about wars? Everything repeats in set timeframes. Everything is cyclical. I believe everything is cyclical. I look at history and see patterns in history and space out during cyclical years of when events occur. And today we'll run back through history and work out where we are potentially heading in the future. If you study history, you can paint a picture of where you're heading in the future, and it'll allow you to have clarity of what you're doing with your investments, where you're looking to deploy your capital. Because when buying property, you are making large transactions. You're putting multi-millions of dollars into certain locations. You want to make sure that you are investing in the right location for the future years ahead. And if the probability of a third world war and Australia being dragged into one is higher chance of that happening in the years ahead than recent years, well, you can be prepared for it to not only protect yourself, but also to capitalize on the future years ahead. So with that said, we'll run through the last 120 odd years, 150 years. Starting in 1850, big gold rush in the US and the UK and Australia. Big boom mining for gold, particularly in regional New South Wales and regional Victoria. This ultimately came to an inevitable bust, which then led into World War One. So historically, wars come around after years of prosperity, which then ends in a bust or a recession, downturn, which then leads into war after the significant downturn. So the downturn in the early 1900s was the land-driven downturn, which then led into World War One. We then came out of World War One and went through the famous Roaring Twenties, a good decade of prosperity, speculation on the stock markets. Lots of people were speculating, making lots of money in the 20s, which inevitably led into the Great Depression, the famous 1929 stock market crash, which then led into the Great Depression in the early 1930s, which then led into World War II from 1939 to 1945. After the World War II, there was then a post-war boom where manufacturing in cars, such as Holden and Ford in Australia, and manufacturing of residential houses exploded, big boom. Also the baby boom of people having lots of babies, famous era of the post-war, which ultimately led into a downturn in the early 50s, which then led into the Vietnam War, which went on for a good 20 years, which came to an end. And then we saw peace and prosperity from the early 70s through to the 2000s, where we saw big booms in the late 70s and in the 80s and in the 90s and lead up to 2000 boom. We then had the dot-com bust, which came around after the September 11 attacks, which then led into the Afghanistan war for a good decade. And then we have had pretty much, well, more or less peace and prosperity post the GFC up to around 2022 with major infrastructure building, high-rise property development, lots of investment going into Australia in Sydney, Brisbane, Melbourne, Perth. All the large metros have had extraordinary amount of growth over the last 20 to 50 years. And now, ever since around 2022, obviously tensions have been rising with the Ukraine and Russia war, which is still ongoing. The Middle East, they've been at it for a good 40 years, but in recent months, it has been amplifying, and in recent years, the Middle East has been tensions have been obviously brewing with the ongoing fighting in the Middle East. China as well, circumnavigating around Australia. They're also making their way through the Asian countries, setting up bases, looking to position themselves well, potentially looking at Taiwan. And you've got Trump throwing himself right in the middle of it. So we are now in that point of the cycle where we're due for a significant downturn, and when we've got these tensions already brewing, you can see where this could be heading. We are on the blue marker. This is the 18-year land cycle framework I use as a framework to invest, not only in property, you can use it to invest in all types of asset classes because it is like the underlying current, or also known as the business cycle, to give you clarity of where we actually sit in the market. Being on that blue marker, equivalent point of time, 2006, or if you go back to the prior cycle, 1988, if you go back again further in the late 60s, before the big downturn in the early 70s, go back further to the early 50s, and even in the late 20s. The roaring 20s was just like this last few years that we've experienced prior to the next downturn, which we're due. Come 2027, 2028, the markets will turn. We'll go through a significant land-driven downturn. The markets will recalibrate. And if these tensions are still hot with the leading powers around the world, potentially we could be dragged into a World War III. So how do you prepare? If you're looking to invest in property, firstly, we use this 18-year land cycle framework to understand where we sit being on the blue marker, because there's not one property market. Every market, if it's a metro, regional town, even types of property, if it's a unit, villa, townhouse, houses, commercial real estate, all runs its own race as the cycle plays out. And we are on this blue marker where historically, like what we've seen in recent years, the likes of Brisbane, Perth, Adelaide, Darwin, and their respective regions outperform, like what they've done. So ever since around 2021 and onwards, they've been going gangbusters. Meanwhile, Sydney, Melbourne have been more subdued, along with regional VIC, New South Wales, Tassie, and ACT topped out around 2022 and have now started their stagnant growth period. So the likes of Sydney, Melbourne are primed for their next growth run. Second to that, regional VIC, New South Wales, Tassie, and ACT have a little longer to stagnate before they'll experience another growth run in the next cycle. And the likes of Brisbane, Perth, Adelaide, and Darwin and their respective regions are hitting highs, are looking to showing signs of a top in the next couple of years. So in terms of markets, Brisbane, Perth, Adelaide, Darwin, regional WA, Queensland, South Australia are all markets that, yes, are going booming today, but that doesn't necessarily mean you should be buying into those markets today, because you are buying the future growth. You're not buying what has been historically. So yes, it's been booming, but you don't necessarily want to get into a booming market, because it's only a matter of time that those markets will top out within 1 to 2, 3 years and then go through a significant downturn. Then if you add that extra layer of a third world war, well, this is what could happen to these certain markets. So I've highlighted regions. This is at a macro level, risks versus opportunities in the next 5, 10, 15 years. We're due for the land-driven downturn come 2028, 2029. So the likes of Brisbane and Queensland, Perth, WA, Northern Territory, and Adelaide are due at a market from a market perspective to go through a downturn, because they've had their significant boom in recent years. They're due to top out and then go through a downturn and then go through stagnant, stabilized growth. Whereas the likes of Sydney, Melbourne, Tasmania, regional Vic, regional New South Wales have already had their boom between 3 to 10 years ago and have been stagnating depending on which market you look at, but they are due for their next growth run in the future years ahead. If we have a third world war, the markets that are obviously at risks are the metros and the regional towns towards the north of Australia. And you maybe think, oh, he's just put these red markers here everywhere. In World War II, Darwin got attacked, Broome, Townsville, Sydney, and Newcastle. That's historically. So if history is to repeat, we could see similar attacks on those markets. I've also highlighted other markets where I think are at a risk from not only a market perspective to go through a downturn, but if the market starts to go through a downturn, then if they're also getting attacked in a third world war and they have to defend themselves, then you can imagine what they will do to the property market. So the likes of Darwin, Broome, Port Hedland, Cairns, Townsville, Mackay, Rockhampton, Gladstone, these are, I believe, the highest risks, obviously due to their location, but also because they're hitting tops and they're due to go through a downturn anyway. Second to that would be the likes of Brisbane and Sydney, because of obviously they are capital cities along with, say, the Sunshine Coast and in that location, but lesser, I would say, major risks. Obviously, if you're right on the coast, so like the Bondi Beaches, Tamarama, Newcastle, right on the foreshore, obviously that's high risk. That's easy to be attacked from uh, from the sea. So if this actually eventuated and there was a third world war and these markets were being attacked, what I would see happen is there would be a rush out of those markets and then it'd be a head out into the region. So I would see good opportunity in regional New South Wales, some parts of regional Queensland towards the more north side of New South Wales, regional Victoria, regional Adelaide, down Tassie, and Melbourne, being in the next future 5, 10, 15 years. These are the markets that are due and the regions that are due to go through a growth cycle, but second to that, will get mass population interstate migration. If there was a third world war, people would just be getting out of the major cities close to the coastal lines, and people will be decentralizing out into the regions. Over the next, 50 years, 100 years, the regions are also due to boom as people continue to decentralize out of the major capitals that are too expensive, and they'll head out into these regions. But in terms of the next 10 to 15 years where there could be a third world war based off historical cyclical rhythms in the market, based off the war cycle, these are the regions I believe are the best opportunities that could capitalize on that event happening. So food for thought, something to think about, something to prepare. But I overlay these thoughts, processes at a macro level. Okay, what markets are due to crank over the next few years, and what markets are due to go through a downturn? And if all hell broke loose, where would people be heading? We would get massive import of migrants. If war broke out, people will want to come to Australia. We are in a safe location in terms of where we sit on the planet. So we are the lucky country. And if you can invest in areas that have been more subdued in recent years, that will get the demand and the population growth. And if the worst thing ever happened, you can always come out relatively unscathed and actually capitalize on such events. So I thought that helps, gives you a bit more of an understanding of why I'm looking into certain regions at this stage of the cycle. And obviously we'll come back up to regional Queensland, Perth, in say the next 15, 20 years. Once they've gone through their significant downturn again, we've stabilized and we're going through another boom of prosperity, they're always markets to invest in. But for now, the regions highlighted in blue at a macro level are where we are focusing on over the next 5 to 10, 15 years. Hope that helped. If you need help, you can always shoot me an email, send me some feedback. If you are unsure of your own investments, if you've already got property in these regions, I know there's some buyers agents pushing a lot of people into Darwin. I just don't think Darwin's a very good idea at this stage. I'll do another video specifically on Darwin. Obviously, it's got the risk of being in a vulnerable position, but also it doesn't have the booming growth out of China that it enjoyed last cycle. If you have any questions, shoot me an email. Happy to jump on a call, discuss your position and your plans, and help you capitalize on the future years ahead to build all-weather residential foundation portfolios to start. And then once you've got 10 properties, we can then help you ease into commercial in blocks of residential apartments. Until next time, thanks for watching.